We can't hold our stocks forever. Sometimes that means that we're going to get out in a couple of weeks, a couple of months, maybe even a year. Sometimes that means that we're going to exit our stock tomorrow. We need to get out at the right time so that way we can both maximize our gains and also cut our losses as quickly as possible. What's up, everybody? My name is Mike, and I believe that everyone can be successful in the stock market so long as you're willing to put in the work. The stock market is not as complicated as the people on Wall Street would have us believe. That said, it does take a good amount of work in order to become successful, in order to learn the right things that will allow us to be successful over the long term. In this video series, I'm showing you every single trade that I took in 2017 that allowed me to triple the return of the S&P 500. I'm sharing it with you so that way you can do it at home as well, and that you know all the strategies that we used, all of the hardships that we had to go through in order to make that happen. It wasn't just a straight line to get to a return of roughly 60% in my portfolio last year. There were a series of losing trades, there were drawdowns, but we were able to have much bigger gains than the number of losses that we had. And so today I want to share with you two trades. I want to share with you a trade in Monster, and I want to share with you a trade in Fold. So this is what our trade in Monster looked like. Monster was a leading stock. It was in a solid uptrend, and it was pulling back to its 10-week line and started to break out. Here's what it looks like on the daily chart up here. And let's actually zoom in on this daily chart. Right? So it was in that uptrend, and we end up buying it just as it breaks above resistance right over here. We get in at $56.04. We end up setting our stop loss right below support. Support is down here below the 50-day moving average. It's getting support at the 50-day moving average for its entire move so far. But we set our stop loss down here so that way it can retest the 50-day moving average. And if it takes out that low, then that's out of character for the stock. At this point, doesn't mean that it might necessarily be done, but it's a shift in the trend. It's a shift in the character of the stock. So we place our initial stop loss right there at 54.13. And the difference between our entry price and our exit price is only 3.41%. Now, that is something that's very important, and I want to make a point of emphasizing the importance of the difference between our entry price and our exit price. When we are able to have a real tight trade like this, it makes it so much easier to have big gains. The way that I look at my gains isn't just, oh, I made 15%, I made 20%, I made 100% on this stock. That sounds nice, but what's the multiple of the amount that I've risked? So on this particular trade, we're risking 3.41% between our entry price and our exit price. So in order to have a gain that triples the amount that I've risked, I only need to make a little over 10%. That's much easier than having to make, say, 20% or 30%, 50%, 100%. Where we enter and where we exit matters a lot. So that's the start of this trade. So we're in this trade, it starts to work in our favor. Fantastic, it's working, it breaks out, very heavy volume, as we could see right down here on earnings, breaks out and starts to run. And then it starts to move sideways, continues to move higher, and then over here, this is the first time that it's breaking below that 50-day moving average. That's the first time that it's breaking character. But we're not exiting just yet. We want to give this stock as much room to run as it can, and we want to give it room because we are trading on the intermediate term time frame. Time frames matter. If we are somebody that's more of a shorter term or a swing trader, then we're probably exiting there, or we're probably exiting long before we even get to that point. We might even have ended up exiting right over here when we had that dip down. If we're a swing trader, could have gotten back in on a swing trade, but for the sake of this and for the sake of the intermediate term model portfolio that we were trading for our advanced stock report service, and that I also personally followed along with trade for trade, we traded on the intermediate term time frame, and that meant following along this 50-day moving average and needing to see multiple reasons to exit the trade. So we ultimately end up selling this stock on this day over here, which is February the 6th, right? February 6th, and we get out right there. And this counts for a 10.89% gain. Doesn't sound that spectacular, but we more than tripled the amount that we risked. So we were able to triple our risk by having that real tight entry and exit point. And that is what makes this trade so wonderful to have, where we don't need to have a gigantic percentage gain. We're able to have a very nice portfolio gain of 3.19 times the amount that we risked. Because I risk 1% on every single trade, and that means that on this trade my portfolio went up 3.19% on just one trade. That's pretty good. Compounded over an entire year, and having other stocks that run much further, much faster, and having stocks where like Fold, you'll see where we ended up taking a loss in that one. When you only risk that 1%, you're able to compound a lot faster. And so that's what it's about. It's about how fast can we compound, and taking trades like this where we're able to make 3 times the amount that we risk in a relatively short amount of time. That is what is going to allow us to win in the stock market over the long term. One final point about Monster before we go over to Fold, and I can't believe that I almost forgot about this, but we advance a couple of weeks and then all of a sudden we have this tremendous drop that actually would have, let me just click on this over here, would have stopped us out at our original stop, right? So there have been other trades where we end up getting stopped out and then the stock reverses higher and then it continues to work its way higher. This could have been one of them. On this right here, when it had that positive reversal and then it didn't undercut and now it's starting to work its way back above the 50-day moving average, it could be very frustrating to see a stock that we just sold start to work its way higher. And then we start questioning, well, did we exit at the right time? Should we have lowered our stop? Should we try to get back in? Well, this is an example of what can sometimes happen, and this is why it's so important to obey our stops. Earnings came, and here we are, way back down, back below where we had entered and back below our initial stop right down there. But we were able to exit over here, and we were able to have a nice gain where we were able to triple the amount that we risked rather than sitting through this mess here. It's so important to pick the right spot to exit, and the right spot to exit for us ended up being below the 50-day moving average and below this prior level of support right there. Here's a look at our trade in Fold. The ticker is FOLD. we ended up buying this stock right over here at 14.57, right on this day here. And you could see that Fold was a leader, and it had a very quick run up, right? So from breaking out over here in May, it ran over 100% in only about 6 months. So very strong market leader at the time. So it tested the 50-day moving average. We could see that over here, tested, dipped below it, and then rallied back above it. So we thought, let's get back in on this day over here. It's getting back above short-term resistance, and the model portfolio entered at $14.57. We had our stop loss right below support over here at about $13.59. So that day right there, that's $13.69. We like to set our stops just below support, and we like to buy just above resistance, so that way it starts to confirm its own breakout or its own breakdown. Right? So on this day over here, we end up selling, right? So real quick trade, we end up selling a couple of days later, and on the position, you could see that we lose 6.73%. The difference between our entry price and our exit price was this 6.73%. So based on our position sizing algorithm, we're still only risking 1% of capital. We look at, okay, we want to enter at 14.57. We're going to set our initial stop at $13.59. Based on that, how many shares can we buy while only risking 1% of capital? The way that I figure out how many shares I could buy is I come over to ChartYourTrade.com and I open up our position size calculator. Now this position size calculator is for free. Go check it out. You don't need a subscription. You don't need to log in. It's just there on ChartYourTrade.com. So you come over here and let's say you have $10,000. Let's keep the numbers nice and round. Right, so let's say we have $10,000, and let's say we want to risk 1% on this trade. I typically like to risk 1% on just about every trade. Sometimes I'll go a little bit lighter if we're in a very choppy market environment. Sometimes I'll go a little bit heavier if we're in a great market environment and I have a lot of confidence on a particular trade. But for the most part, probably 80 to 90% of my trades are all at 1% risk. So we entered at 14.57 and we had our initial stop at 13.59. So we come over here, we click compute, and we could see that we're able to buy 102 shares, that this is going to be a position size of $1,486. So about 15% of our trading capital on a $10,000 portfolio. And you can see that we're risking 6.73% and that we are only risking $100 or just 1% of our trading capital. So when we think about this trade and that we lost in a hurry, we lost 6.73% and we only gained 10% and change on the other trade. But when you think about it as a multiple of the amount that you risked, we lost 1R on this trade, right? So 1 times the amount that we risked. So we lost that $100 on this trade. But on the other trade, the one in Monster, we made 3 times the amount that we risked. So we made a little over $300 on that trade. So even though the trade in Monster only got us 10% or so, like if you're looking at it on that percentage gain and you're looking at this one as a 6.73% loss, you still made $300 on that trade. You lost $100 on this trade. You're still up $200 on the same account, and that there is how you end up winning in the stock market. It comes down to risk management, position sizing, and also going after the right trades, the right type of trades, going after them systematically. But it has so much to do with how you manage the trade after you're in it and how you position size. Just to go back to this trade before we wrap it up, you can see here that, yeah, it does end up retaking the buy point. It falls further, but it's just, Fold has just been chopping around really since we sold it back here in November. And so that too is a reason why we want to make sure that we know our time frames, know our strategy, know where we're going to get in, know where we're going to get out. Otherwise, we'd have our capital tied up in this, and we're missing out on all these other opportunities of stocks that are breaking out, that are doing what we want them to do, and we're not just stuck in this stock that's been going nowhere for the past 5-6 months. So I hope you enjoyed this video. I hope you found it helpful. If you'd like to try out the model portfolio for yourself and take a 3-month trial to it, use coupon code YouTube and go to ChartYourTrade.com. I'll link it somewhere up here. I'll also include a link in the description below that you could go and try out the model portfolio, try out the advanced stock report service, and get access to my partner Adam Sarhan and I for 3 whole months for only $27. That's a terrific value, and I encourage you to go check it out, check out the analysis, check out the research. Let us help you and help guide you and start having this level of success in the market and experience it for yourself. Use coupon code YouTube and get it for 3 months for only $27. Thanks again for watching. I really, really appreciate it. If you have questions on anything I said at all, please leave it down in the comment section below and I will personally help you. Also, if you like this video, click that thumbs up button. That's going to help us out a lot. And make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.